Hello everyone, welcome to Crypto News today, April 4th, 2026. And the top crypto news stories are as follows. We'll start today's episode with our ETFs and move to Canary Capital, which has filed an application for a spot Pepe ETF in the market. As you understand, since they're applying now, it will take many months to come out, but soon Pepe will also have its own ETF. Speaking of ETFs, we'll go to Morgan Stanley and look at its ETF, which currently has inflows. On April 8th, it had inflows of $30 million, and on April 9th, it had inflows of $14.9 million. So it's doing well for now. From our ETFs, it's time to go to an exchange for today, and we'll go to Binance, which will remove several coins from its exchange on April 23rd. These are BIFI, FIO, FAN, MDT, OKT, and WAN, just so you're informed. Since we're talking about coins, we can't skip the Pyth Network, which will give data control to institutional investors. More specifically, Pyth is launching a platform for financial institutions to create and generate revenue from their market data on the blockchain. This will be called the Pyth Data Marketplace and will initially support datasets for forex markets, precious metals, and crude oil swaps, while allowing publishers to maintain full control of the data they share, according to the announcement. 7 new institutional data providers will create price feeds in the marketplace at launch. So this is what we say in crypto. As these evolve, they'll give us control over our own data, something that Pyth is doing for institutions to start with. Moving on to what I consider the big news of our day, we'll go to Bittensor, which is down 19% on the 24-hour chart. The reason is that Covenant AI is withdrawing. To be more specific, Covenant AI, a major subnet builder on Bittensor, announced it's leaving the AI-focused network ecosystem. I should remind you that this is the same team that built Covenant 72 billion, a massive LLM model on Bittensor. As the founder of Covenant AI said, the company can no longer rely on Bittensor because the network's governance conflicts with its stated commitment to decentralization. In simpler terms, he's saying that Bittensor is a centralized entity and not decentralized as it promises, like the majority of cryptos in the crypto market, as you can see from the crypto news. More specifically, Covenant AI says that Bittensor's coordinator is one of the main problems because it has claimed power over the subnet to regain control of Covenant, specifically the 72B model I mentioned. This has become too big to manage, so this is why Covenant AI is withdrawing, and this is why Bittensor has fallen so much, because it's losing a very important player on its network. Continuing with AI, we'll move to banks. Since banks obviously watch crypto news and saw yesterday's episode, they've started worrying about the myth I told you about in the previous episode. In a meeting that took place, Treasury Secretary Scott and Fed Chairman Jerome Powell met with Wall Street bank CEOs to discuss potential risks in cyberspace connected to the myth, as Bloomberg reported. All CEOs from all major banks participated in this meeting. Bank of America, Wells Fargo, Citigroup, Goldman Sachs, Morgan Stanley, all the big players were in this meeting to discuss the problems of the myth, because crypto isn't the only category where everything runs on code. Banks today have all their systems as code, and believe me, they have security vulnerabilities that the myth can find and exploit. That's why they're starting to discuss this today. As the cherry on top, we'll also go to OpenAI, which is also planning an advanced cybersecurity model only for trusted users. So just like Anthropic, OpenAI also has its own model that's very good at finding security vulnerabilities, something like the myth. And just like Anthropic, OpenAI will give this model to specific entities to upgrade their systems before releasing it publicly. We've come to our beloved crypto market. Bitcoin is stuck at $72,000 as Fed officials don't know what to do with the economy. More specifically, on Wednesday, the Fed published the minutes from the last FOMC meeting on March 17th and 18th. The session concluded with 11 votes in favor and 1 against maintaining stable interest rates at 3.5% to 3.75%, with many officials being cautious about the potential effects of a war and what could happen to the economy amid the risk of further conflicts. The official consensus indicates a possible interest rate cut this year, but as Fed officials noted in the minutes, only if inflation doesn't get out of control. One today, we're expecting the core CPI year over year, which was at 2.15%. They expect it at 2.7%. And if it exceeds by much, you know what will happen. These are the CME Group forecasts, which in 19 days say there's a 98% probability that interest rates will remain stable. Nevertheless, there's a 1.6% chance we'll see an interest rate increase. And if the core CPI year over year exceeds by much, this little number will rise, as you understand, and affect the markets. For the positive news to close the episode, we'll go to Michael Saylor, who says Bitcoin has reached its bottom around $60,000. Obviously, the man can't see the future, but he believes we've seen the bottom of the crypto market. That wraps up the top news for crypto today, April 4th, 2026. I'd like to remind you that the content you just watched is created for educational purposes only and should not be considered as investment advice, but rather as investment opinion. Please subscribe to the channel, leave a like, and feel free to comment. Take care, everyone, and have a good day.